back to the DAS Trader Newsroom. This is our second to last newsroom edition of the year. Today's title is Earnings Season Wrap Up and Early Analysis of the Holiday Season. My name is Michael DeGioia. I'm the Director of Educational Services and Licensed Professional here at DAS Trader. And I'm joined by my co-host, Jill Molandrino, Global Markets Reporter from NASDAQ. Jill, how are you today?
Good, doing well. Thanks so much, Mike.
We're coming close to the end of the year here,
Yes.
And we're into the holiday season. The markets are bracing for the return of the debt ceiling and budget drama as the federal government starts to run out of funds to continue its operations going into the first week of December. Next week is the Thanksgiving Day weekend, the big Black Friday event. And Congress continues to try to pass the Biden Human Infrastructure Bill. Jill, what are your thoughts on how this is going to play out in the next 2 weeks with obviously we have, all kinds of stuff going on politically, but they did pass it through the House today. What's going to happen in the Senate, in your opinion, and what is the market's take on all this going to be?
It's so interesting. There's so much going on in the market right now that you and I were talking about before we went live, that the market should be concerned about. And clearly it's trading through all of that. I mean, the debate around the debt ceiling, I feel like no one's even talking about it because we're going from, I wouldn't say crisis, but from one issue to the other. We've been dealing with the budget drama, the infrastructure bill. Everyone's talking about inflation, the Fed rate decisions, who the next nominee is going to be. We'll get to that shortly. But there's so many things that should technically be on a wall of worry that we're not even thinking 2 weeks ahead, it feels like, unless, the market being a discounted mechanism, it is looking out that 5-6 months and doesn't think that this is a blip on the radar. We've seen what has happened where debt ceiling debates and threats to get to the end of the line and possibly not make a payment and shut down government spending has happened. And we've seen what market volatility can evolve from that. You and I have seen that. So to see the market trading as calm as it has been does give some concern for complacency in the marketplace, or just how much more it's because there's so much being thrown at us that the market is just going to blip on the radar. You know what I mean?
Yeah, I do know what you mean. And from a technical perspective, I always like to keep bringing us back to the charts. From a technical analysis perspective, we always say that up to 70% of the move can occur in the last 30% of time. It technically, when markets are like this, you think, oh my God, they can't go any higher. And then they go like this. And that's usually preceding some kind of steep drop. So you literally go like this, kind of a slope, and then you go very, very steep, and then you get some kind of a sharp drop. And I'm almost embarrassed to say that I'm old enough to remember irrational exuberance from the internet tech bubble. Previous Federal Reserve Chairman Alan Greenspan said the markets are in a period of irrational exuberance. I believe it was something like 1995 or 1997. They continued in a period of irrational exuberance all the way up until 2000. And then the NASDAQ really didn't start to fall apart until I guess it was March or April of 2000. And they got really, really, really irrationally exuberant. It almost feels like the same kind of situation now where nothing bad, even when bad news comes out, it's not taken as bad news. It is just literally discounted and brushed aside. It doesn't seem like the market's reacting to normal free market forces. It feels like the market is a zombie market that is a slave to the Fed. And that brings us to the next topic, right? We have very, very high oil prices. This is, I think every American is reminded of the high oil prices every time we go to fill up our cars. Oil prices are dropping, thank goodness, but probably not for the reason that we would have all hoped. They are dropping because of renewed fears of lockdown. Who would have thought that 2 weeks to stop the spread we'd still be talking about this almost 20 months later? But it looks like there's some possibility of further lockdowns. Some lockdowns are happening internationally. and that will possibly drop demand. The question is will this help abate inflation? What are your thoughts on oil and possibly slowing down the rate of inflation? Because inflation has certainly become a concern to
Right.
everybody.
That has been the narrative, and of course, oil moving lower will certainly help inflation and the cost of consumer in that particular sector. I don't know if it's enough or a big enough piece of the pie to help alleviate inflation in general, because that's just one piece of it. The fact of the matter is that we are still dealing with supply chain bottlenecks. The demand is there, the supply is there to a certain extent when we can finally get it to onshore, but we're dealing with a labor shortage. And until we have people that are able to deliver goods and services and manage and really execute on the logistics that are necessary to get it from container to store to the person's home, prices are going to be higher. It's basic supply and demand. There's too much demand and not enough supply. And, I just don't think oil's enough.
No, I would have to agree. I think that, yes, oil will probably, it's already pulled back about 4% today. Oil will pull back slightly, obviously, as there is a drop in demand. But oil is just one factor in a basket of factors that tie into inflation. One of the other big factors in inflation is cost of produce, cost of meat and food supplies, and of course this whole supply chain issue, which I don't think any of us ever realized what the depth of the supply chain issue, if there was some kind of a supply chain interruption, how it would all affect our lives. And I think that this time of year is really going to bring it to the forefront. We'll talk about that in just a few moments. But certainly, the other big question is that we have this kind of looming uncertainty as the Biden administration needs to choose a new Federal Reserve chairman. What happens to the markets if Jerome Powell is not his choice? Now, Jerome Powell is the clear leading option, as he has been the current Federal Reserve chairman. Joe, maybe you could tell us about some of the alternatives and why does the market love Jerome Powell so much?
Well, this is interesting. I've been covering this quite extensively this week. What's interesting here is Powell's a Republican, so kind of has a bipartisanship feel there. So I think that's one of the reasons why you might want to steer the course for that perspective. And an analyst brought up a couple of good points. I think the fact that Biden, who could have showed some decisiveness here, has kind of been going back and forth. And I think that can impact the credibility of the administration and the decision for this particular instance. Not getting political, but this is something that need a little bit more decisiveness in here. If Powell stays, you could potentially have tightening a little bit quicker because he's not fighting for the next 4 years. He's done what he said he was going to do these past 4 years. If you have Lael Brainard come in, a Democrat, she might be under pressure to keep things going the way they were and keep the liquidity, right? So it's interesting. And I don't think there's a clear-cut winner at this point. But the Fed typically hasn't been politicized. When Fed nominees came and went, I mean, the average person really didn't care. But now I feel like because it has been politicized, we are in an economy that's growing despite our supply chain issues. So whether it's Powell or a new incomer, they're going to have to deal with inflation. They're going to have to deal with the labor market. They're going to have to deal with an economy that's growing really fast. And that's going to put pressure to raise interest rates. So it's a very interesting dynamic that we're in right now. And I can't recall a Fed choice being as politicized and so well known like it has been now.
That's probably the thing that stands out the most is that pretty much everything's been politicized, including this. So it's kind of that's the anomaly. Is usually a Federal Reserve chairman being nominated or being renominated. It's kind of like a function of government, and this has certainly taken on an additional political air to it, which is a little unusual.
Mhm.
It seems like the market, though, certainly moves. The prime mover of the market currently is the Fed and is the government and government spending, which is really not what is the usual expectation from a free market economy. That brings me to our last piece of news for today and this week is, how do we close out the end of the year? Will supply chain problems and inflation be the Grinch that stole the Christmas rally? I'm going to be watching Black Friday next week very closely. I know personally, I tried to order a new iPhone and they told me I'd be lucky it would come in by Christmas. So it seems like those supply chain issues are affecting us all. I'd love to hear your thoughts on this.
Yeah, I'm one of the lucky ones who gets to work Black Friday, as most reporters do that are on the finance beat. News have retail coverage, and also a reminder that we close at 1 o'clock Eastern on Friday for the Thanksgiving
Good
holiday.
reminder.
So yay for that. And we have some really great guests that are coming on the show. We have the CEO of Overstock, Jonathan Johnson, coming on 10 a.m.
Friday. He's always interesting.
He's always interesting. And what we're doing with our Black Friday coverage, it's not just NASDAQ listed companies. We're also having guests on from Sourcing Journal, a lot of these companies that do analysis and provide data sets to the industry. They have some really good insight on supply chain trends, all that kind of stuff. So we won't be talking about promotions that are happening at the stores and so forth, but a higher level look going into 2022. So we have a lot of great content. I think the supply chain is still going to be an issue. I mean, this week, LA Port had reported that they've gotten through at least 25% of the overflow that they've had, but it's still, you could get the ships to shore, but you need to get it from the shore to the store, and that requires trucking. That's where the shortage is. My experience has been, if things are in stock, whether it's Wayfair, whether it's Amazon, whether it's a store, if it's in stock at their online fulfillment, those have been getting to the house on time. If they are selling third-party merchandise or they're sold out at the moment, it's not going to make it in time for Christmas. There's a problem with getting from like warehouse to fulfillment. So that has been my experience. I can also tell you with furniture, what I should have gotten in May is now going to be February. There's just a labor shortage that, you can produce all the product that you want, but if you can't get labor to deliver it, I mean, Mike, you can't get blood from a stone, as far as
exactly. That's 100% right.
Part of the issue. So, and I can also tell you with kids' toys, my niece is 2. I ordered something middle October. It might be here November 30th. So for those of you that have kids, you need to get on this or at least get in store.
Yep, absolutely. It seems like if it's in stock, you're fine. Whatever's there is there. But getting things off of large container ships into the port and then from the port to the store, it seems like the supply chain problems are far worse in the interior of the country than on the coast of the country, where they're closer to port and then closer to market. At least from my conversations with people around the country, that the supply chain problem is worse in places that aren't close to the ports and need to be trucked very, very far to get to the specific location.
Well, Mike, here's the other issue too. This might be a little bit forward down the line. Let's say, for example, a bigger swath of countries goes into lockdown, whether it's in Europe, whether it's in Asia, and we have another, month or two where we have port closures for that reason. And I haven't heard anyone mention that, but I just can't even imagine, because part of the issue is, I can tell you, like furniture is an example. You select fabric for your furniture, getting fabric from overseas to here and then to get it made, it's just getting really drawn out. So I think if we were to get any more port closures, that could potentially exacerbate it, but hopefully it doesn't come to that.
Absolutely. I think we're all in agreement that it will, you kind of have to pick and choose what's there this year for Christmas. And, you go and see what's on the shelves. And this is kind of a not too reliable for for shipping and delivery.
I just got UPS at my house. How funny is that?
That's it. It's appropriate. It's appropriate.
Southern app, yeah.
Yeah. So that pretty much wraps it up for this week. We have one more episode of, or one more installment of the Dash Trader Newsroom. Thank you so much, Jill. You get to officially start your weekend.
All right.
And have a wonderful Thanksgiving. Always a pleasure to be here with you on a Friday. Thank you so much, as always.
All right, you got it. Happy Thanksgiving. Take care.
All right, everybody. I'm going to just very quickly, bring up my charts. That we haven't done a review of the charts for some time. So just hold on one second. Second, just going to take care of, I'm having a little bit of a switching to the charts computer issue, so I will take care of this real quick. Unfortunately, sometimes when you got too many things up on your multiple monitor computer, okay. Ready to bring these online. Let's take a look first at what the markets have been doing and take a look technically. Move this over here. All right, so I'm just going to share my screen and bring up my Dash Trader. So first of all, let's take a look at the SPY. I'm not sure why this is so. Okay, so let's just take a look at the SPY. And this is exactly what I was talking about with Jill and everybody here earlier today is that you can see that the slope of our uptrend has gotten so steep. We had that pretty deep pullback on the initial scare related to the government shutdown and the debt ceiling. So we broke the trend line that had been in place for a long time. This is called the trend line break. And then this is called the trend line fade, meaning that the markets broke the trend line and then have rebounded back up to the trend line, and they faded back to retest that trend line area. And this is usually the trend line break is the earliest indication that a trend is starting to falter and potentially come to an end. And then you have the trend line break, and then you have the trend line fade, which then gets stopped. So the trend line was at first support, and now the trend line is serving as resistance. So the question is do we break back above the trend line, which would then invalidate the trend line break and fade? That's fairly low odds for that to happen. It does happen, but it's fairly low odds for that to happen. And then usually what will happen is you'll get some additional selling from these levels. And that's usually what happens from a trend line break and fade. It's not just happening on the S&P. It's actually much more obvious on the DIA, which represents the Dow Jones Industrial Average. So you can see that we hit the trend line, and then now we've faded off the trend line, and now we've actually broken down below the moving averages. This is fairly negative for the DIA. So I would say from a relative strength, relative weakness perspective, the Dow Jones Industrial Average is the relatively weak indices compared to the SPY and compared to the NASDAQ. And let's just bring up the NASDAQ, which is the QQQ. NASDAQ, as always, is the strong man. The NASDAQ has been the leader. You would expect the NASDAQ to be, the lagger. But the reality is that because of it's this latest sell-off is due to potential lockdown COVID fears, which tends to benefit technology companies. You can see that we have a pretty steep possible recovery. Okay, so we have a high, a new high, and we have a potential breakdown and retest of this trend line area. So we have a high, new high, and we just recently made another new high on the NASDAQ. So the NASDAQ certainly showing no signs of breaking yet. The DIA being the weak man and the S&P showing some signs of a trend line break and fade. I do not see a trend line break and fade kind of situation here on the NASDAQ, only on the DIA and the SPY. Now I'm going to bring up USO, which is oil. Oil certainly pulling back. Okay, certainly making a deep pullback here on oil. Usually what we would do is we would put in our anchor, project out our trend line. So we still have quite a deep area to retrace. Again, oil is responding, and probably this horizontal level is going to be a factor here on oil. Oil is responding. So this would be called, this is the prior resistance level. So that would be now serving as minor support on oil. This is the USO contract, which is the 1 month tradable oil ETF. You could also look at USL if you're going to swing trade. USL, not UAL. Okay, USL is the 12-month contract. That's better if you're going to hold overnight and swing trade oil, in which case this is your support level. You have resistance, here would be your support, and certainly this would probably be lining up somewhere in the area of here as well from that just long-term trend line. Let's take a look at GBTC. We've already seen quite a significant pullback on Bitcoin. Now, why was Bitcoin making such a rally? Bitcoin was making a big rally because it was a hedge to inflation. It was a hedge to inflation because obviously, you're losing value. It's, I think the number says it's about 1% of the dollar's value is being lost to inflation every 30 days. So if you had $100,000 every 30 days, the $100,000 would only buy $99,000 worth of products because the products have gone up in value. So the Bitcoin was certainly doing very, very well. This is the ETF that tracks Bitcoin. Bitcoin pulled back about $10,000 on the actual, the actual spot price. But certainly you can see here on GBDC, it was also pulling back quite considerably. Now, as far as earnings season went, generally retailers did very, very well during the course of earnings season. I mean, you can take a look at some of the retailers. Target, had made a big earnings run. It certainly pulled back a little bit, lately after they came out with earnings, but they did have some strong earnings. Most of the retailers, KSS was Kohl's. Most of the retailers have done fairly well. That's largely due to them beating their earnings expectations due to stock buyback programs. They bought back a lot of stock. They took some shares off the market, and therefore that gave them some better EPS, some better earnings per share. So certainly earnings season was good for the retailers, and certainly good for many technology companies. This was the run up on NVIDIA, really, really a powerful tech company. I mean, you can't really get much better of an uptrend than this. It's kind of extended at this point, but certainly they've done great. This is NVIDIA. This is AMD, a semiconductor company that does many of the same things as NVIDIA. Their graphic card producers, also somewhat active in the crypto space in terms of some of the crypto mining that their processors are used for. NVIDIA is also very big in AI, artificial intelligence, et cetera. So lots of companies did very, very well this earnings season. And for the most part, these are technology companies. That's why these strong technology companies have contributed to the strength in the NASDAQ. So with all that being said, I'm going to switch back to the charts, switch back to the presentation rather. And just give our standard update. Make sure you stay up to date with all things DAS. Signing up for our monthly newsletter and emails. We've really made some amazing, done some amazing analysis and some really good calls in our newsletter. So simply fill out the form at the bottom of our webpage, www.dastrader.com. Subscribe to our YouTube channel, Dash Trader TV, for market analysis and reminders. Certainly follow us on our social media as well: LinkedIn, Twitter, Facebook, Instagram. And certainly don't forget to follow Jill on Twitter at jillmolandrino.com on Twitter. That's at jillmolandrino.com on Twitter. I want to wish everybody a very, very happy Thanksgiving. There's only one more Dash Trader Newsroom before the holidays and the end of the year. So that's all for today. Trade well, everybody. See you in 2 weeks.